Hi, I'm Chuck Gibson. This is Taking Stock with Art Jarvis, a bi-weekly discussion of what is happening in the economy, the world of finance, and personal investment with Art Jarvis. Taking Stock with Art Jarvis is a presentation of Loveland Beacon in partnership with Jarvis Global Investments, LLC. Now here is Taking Stock. Welcome, Art Jarvis. Taking Stock, episode number 61. On this Tuesday, here's another topic for the day, just by the way. On this Tuesday, November 11th, Veterans Day 2025. Did you serve in the military?
I did not.
Well, you know what? Unfortunately for the listeners, they're going to get stuck listening to a couple of non-veteran.
Yeah, true.
However, you have veterans in your family.
A bunch of them, and I'm very appreciative for their service.
Amen. So. Well, so right now, Sue and I, of course, her late husband served. Her father served. For me, my dad served. You know what? This is fun. Dad served in World War II. Likewise, Sue's father served in World War II. So Dad served in World War II. My mom's dad, Grandpa, served in World War I.
Oh, wow.
So we got some military veteran stuff there. No, not that I know of any revolutionary or civil war, whatever, none of that stuff. But anyway, and however, Sue and I are very proud right now. The grandson is serving in the United States Air Force and was recently deployed. We're not allowed to know. All we do know is that to the Middle East.
Okay.
So anyway, on this Veterans Day,
they don't give out that information.
No, all we know is Middle East.
Yeah.
And our grandson is somewhere in the Middle East with the United States Air Force currently. We're very proud of him. Very proud of our family roots, as you just mentioned. You are as well on this Veterans Day. So thank you.
Yeah.
To all the veterans, and any of you who are listening now that are veterans, we thank you.
Thank you very much.
Yeah. We could not be more grateful for the service and the sacrifice that you made for our country and our freedoms so that we could have this session. I'm going to call it a session, and people are going to figure it out here in a minute, what this session is all about. In Taking Stock, episode 61, it's about finance and the world economy and all those topics.
Generally speaking.
But you know what I didn't do on the introduction, Art, today, welcoming you to the show. And you know what? Grateful to have you coming back.
Good to be here.
Every 2 weeks, people, you can tune into this. But I'm grateful for you being here and your presence. But I didn't say, so how are you?
Yeah, as always, I'm doing fantastic.
That's perfect. That's perfect.
It's funny, I was talking to a friend just the other day, and we got talking about the veterans and things like that. And, obviously the World War I veterans are no longer with us. And the World War II veterans, there's only a couple handfuls left. If you were 20 years old or, back in 1945, you'd be 100 today, this year. So, the only ones left are the ones that went in at 16. Yeah, the youngins, and they also have good DNA because they're still around at or near 100.
Right.
So, right. But no, I'm with you on that. Thank you to the veterans and everything. They deserve our high praise. Let's put it that way.
Well, I would be remiss. I mentioned family specific and the great pride that we have in our family members that have served, and in this case, our grandson Logan, who is serving right now. But I would be remiss if I did not mention, and maybe some of the people who listen to this are going to say, "Oh yeah, Rennie Janssens, who also served in World War II," and he's a member of my family too. Rennie is a family member. So I'd be remiss if I didn't mention Rennie, and his son is maybe he'll listen in, Rennie Jr. And I love that man, and he was really good to me, and he's kind of like a second dad. So, and spent a lot of time with Rennie. So another World War II veteran, which just because it is Veterans Day, and a lot of things can come to mind, especially World War II images. Rennie Janssens saw flag go up at Iwo Jima.
Yeah, really nice.
Witnessed it.
Yeah.
And I love his story about it. We're going to share this real quick. His story, when I asked him, I said, well, wait a minute, because we were talking. I said, and he says, yeah. And he says, but I got to tell you something, Chuck. He said, I wouldn't have remembered because he said it wasn't anything.
Sure.
He said it only was something because it became that iconic photo. Otherwise, it was just something we saw.
Well, it's something you just happen to see after
Right.
a very rough period of time leading up to the raising of that flag. That was ugly.
Well,
So I'm sure that at that point they're just happy that the fighting had ended. So
well, he was on a U.S. Navy destroyer, and he is the recipient of a Purple Heart. So that tells you a little bit about his experience in World War II. But anyway, so to all those veterans, Rennie and family members, and everybody else out there, some of you who are listening and hearing this right now, just thank you again.
thank you.
And so there's a different kind of war that's been going on.
nice segue.
That's what I get paid for.
Right?
You just you got it easy. You're just a guest. I throw softball questions to you.
Yeah. I tell people all the time, you make me look good. So that's there you have it.
Well, I hope this will make. So there's been a war going on, and unfortunately, the battlefield is we'll call it the Beltway, right? Capitol Hill.
Yes, correct.
That's where the war's been going on. But we have good news to report from the battlefield of the Beltway. It looks as though on this, I'll let you say how many days now?
Today's the 42nd day, so that's a full 7 weeks. I'm sorry, full 6 weeks, sorry.
That'll work.
A full 6 weeks, and it's also, the old record was 34 days, so we're a solid 8 days past that, and it'll probably be at least another 2 or 3 days before it actually ends.
So the 42-day political war in the Beltway, the Battle of the Beltway, is coming to an end. That's the good news we have to report. Senate voted yesterday.
Correct.
Nothing happened. you and I both had a good laugh talking off record. Nothing happened in Congress today because it's Veterans Day.
That's right. They're
We won't
closed.
talk about nothing happened in Congress on any other given day. But that's just
and such. Not that any war is good or whatever, but such an unnecessary amount of time for this. I guess I can stomach the fact that they end up closing. There's a reason that most government shutdowns only last a few days, right?
right.
Because generally they understand that. Hopefully they understand the fact that this isn't just turning off the government. This is impacting Main Street. Okay, this impacts people, and the longer it goes on, the more it starts to really impact people, and that's really where we got to. When we hit that 30-day mark, you're really starting to talk about hitting some certain segments of our citizens, starting to really hit them in the pocketbook. Okay. So, and I think, I would have to say that, generally from what we're looking at today and the deal that's being brokered here this week is generally not different at all than what was proposed 4 or 5 weeks ago, right? So you cause pain to U.S. citizens for no good reason, right? I mean,
right.
You didn't accomplish anything. There's nothing better out there. So... And, just let's say it wasn't even hurting their pocketbooks, but then you're also causing strife in the families and things like that. That's I'm going to hop off my soapbox, but I mean, it's unnecessary.
Yeah, well, neither one of us, and for the listeners, because again, we're not doing this video for them to see. So, but if they were looking, they would see no documents in front of Art Jarvis, no documents in front of me, Chuck Gibson, where we're looking and saying, well, here was the proposal, 6.5 weeks or 5.5 weeks. And now you got me on the 6-day week. But 5.5 weeks ago,
right.
I mean, really, 5.5 weeks ago on day 2 or 3, this was resolvable. But we don't have that document in front of us. I can't look at it and read word for word the language. You know, everybody at home right now, I'm looking at my hand like it's a piece of paper, and I'm reading this language that really doesn't exist on my fingers.
Right.
But anyway, we don't have that document, and I'm not really holding that document, so I don't know the word for word language of what was proposed by the Republicans at the outset of this that was voted down, and then over and over again. So now, 5.5 weeks after that, the word is, generally speaking, that this proposal that passed Senate on Monday, November the 10th, was virtually identical.
Yeah.
Same language, same proposal. We could have said yes to this, and day 3, not day 42. And now still, because again, Veterans Day today, nothing's happening. So it could take 2-3 more days. It'll be day 45, as Art pointed out a couple of minutes ago, this Friday, where hopefully it's a done deal.
Right.
And government will officially reopen, and I guess federal workers will, some have been working without pay, technically, without receiving their paycheck. But they'll go back to work. And programs that were impacted by a shutdown of the government and the lack of funding for that, those programs will once again, get back online, and the funding will be there appropriately. And then, members of our federal government, Senate, Congress, can get their heads together and maybe settle a few other things that were, in debate for the last 5.5 years.
At least they're back at the table trying to
But the
fix
bottom,
it. Yeah.
the point you were making, and that I agree with, that we're making right now, talking about it, is this, 30, let's just say 35 of these 42 days were unnecessary strain and stress.
Yeah.
And, taking stock, that's what we're about. So,
And here's one other entry we talked about in prior episodes, was that the discussion that was being thrown around that, generally speaking, and they government workers get a quotation mark vacation, but then they come back and they get a retroactive paycheck. Well, there was some discussion about that not happening this time, that there would not be a retroactive
some people
paycheck.
would not get their jobs back.
Well, but guess what? They are.
That's been resolved.
And it's also interesting that and we'll talk about this a little later, I assume, but, they're going to get that retroactive paycheck as they're heading into the holiday season. So,
Merry Christmas.
Well, I guess so, but it's in my mind, that should actually once again help ramp things up a little quicker, and also get us back on the trend line that we were on before we went into the government shutdown. So
I see. So you're really making a point where we're on track on this episode now, talking about the economic impact.
Yeah, because there is an economic, especially
impressed.
when you get over a month.
Art, I'm impressed. You took us there. See, you made the great segue there. Brought us back. This thing was off the rails.
Mm-hmm. Well, the problem is once you hit that month mark, you really start to inflict some pain. Okay,
right.
And you will probably started to, and will and are causing damage to. Now, it might not be a whole lot of damage, but you're still starting to cause damage to our gross domestic product and things like that. Okay? Now, will we get back on that trend line? Probably. But you start to question, a couple questions. One is, how long does it take before we see those economic numbers get back on that trend line? Number one. But the other question is we have not really had reliable economic numbers for the last 6 weeks. We got we got an unemployment number, but it's kind of suspect. Like, we think it actually might be worse than that. Before we went into this, the inflation numbers were slightly trending up. So the question is did they continue that trend? So if we were at if we were at 3% inflation? Are we now at 3.1 or 3.2? Unemployment was at, say, 4.2 or 4.3%? Are we now at 4.4 or 4.5? I mean, these are all things that we're going to have to sort out here over the next month or two to actually kind of get, okay, where are we really, from. But, and the other thing is we've had 2 rate decreases here. One during, during this shutdown. So, so a lot happened in a month. Let's put it that way.
Well, you know what? A lot happened. 2 weeks ago, episode 60 we recorded of Taking Stock. That was at 28 days. We're up to 42 today. And a lot's happened in just those 14 days. Thankfully, one of the things that's happened is we seem to be moving to opening the government back up, funding programs, getting people their paychecks, getting them back to work with pay coming and everything else. But so there was a lot going on. The interesting thing that, when we were talking offline, Art, that you told me is, the inconsistency, the ups and downs over these now 42 days. You and I talked, again, just 14 days ago, the S&P, and confidently said that on this date, so I'm just going to ask you right now, there would be a number.
Yeah, I did.
So what is the S&P 500 at the closing bell on this Veterans Day?
Yeah, we're still in the 6,800s.
Okay.
Interesting enough, we'll go there. So
I know it climbs in 69.88 or something like that, or 69.
Yeah, well, we were definitely in the 69s. We were probably 40 or 50 points maybe away from 7,000. And I think you asked me if I thought we'd be at 7,000.
Right.
And
that was the question.
And my answer was yes.
Absolutely.
Yeah.
Well, I know we saw one another. This happens sometimes. We actually see each other when we're not sitting down to record, an episode of Taking Stock. And I had to laugh because you used that line and you said, can I revise my number?
That's right, exactly.
So that was about a week ago. Can I revise my number? So here we are a week later. I've paid no attention to it whatsoever, zero. But I kind of knew without paying attention that it didn't get 7,000. It dropped. Yeah. But the point of my question today, forget the S&P 500, don't forget it. But your comment earlier offline was it's been, kind of a little bit of a roller coaster, inconsistent throughout the timing of this government shutdown. Now you're talking about will we get back on track? Would you expect to see something more consistent immediately? Or, well, let's say in the next 30 days following the reopening of the government.
Yeah, yes, more consistent, and I think again we get back on trend. I'll if you will allow me to extend my 7,000 on the S&P for 2 more weeks, I'll take it. Well, wait
a minute. I just want to clarify. So the expectation, maybe by you, is that it will be back to 7. It'll hit that 7,000 mark. 14 days from now, which would be like 2 days before Thanksgiving.
Yeah, you're asking me to make a prediction for 2 weeks, and that's a tough. But if you extend it all the way to where I think we'll be by the end of the year, I think we'll. I almost said definitely. I feel strongly that we should be above that. And let me preface that with a little something. Number one, we are now in a declining interest rate environment. Okay.
Right.
Declining interest rates, lower interest rates raises the market multiple, okay? And then you take that market multiple and you multiply it by some combination of corporate earnings, some actual earnings, some future earnings, right? Well, we've had strong earnings. The third quarter 2025 earnings reports are coming in exceptionally strong, okay? The positive surprises are probably the strongest positive surprise we've had in my entire career.
Wow.
Okay, so we're talking 39, 40 years, right? Okay, so good gross domestic product, slowing probably, good inflation numbers, good unemployment numbers, good interest rate environment, right? That's a cocktail for a very strong market, okay? And we're sitting here and we talked about the S&P 500, and this is the other kind of interesting tidbit is no, the S&P 500 did not hit new highs, but we were up 1.5% or something like that yesterday. Yesterday was a very strong day, so we're we're almost at that. I think we're at 6840 something. So let's just call it 6850. We're not far from 6900. The interesting thing though is the Dow Jones actually closed at a new high today. So the S&P 500 is heavily weighted to the technology stocks. Well, technology stocks were actually down today with the Dow Jones being up 600 points, which is not really kind of a normal day. So what I really like about that, well, let me say, what I really like about that means we're kind of shifting from, you're starting to see money come out of the technology stocks and start going into other sectors, which is exactly what we want to see. Because we've had for over a year, we've had these other sectors neglected because everybody's been paying attention to technology stocks, right? So we're really starting to see a much more broad-based move up in the market, and I like that a lot.
Well, see, now you answered a question because I wanted to ask you about NVIDIA.
Yeah.
Because they sold off some shares, some portion of their. Are you aware of that?
Yeah, the one company actually liquidated their entire $5.8 billion position in NVIDIA stock. So
that's what I wanted to ask you about because I heard something and I thought, well, wonder what that's all about because we have talked just because we talked tech stocks and specifically NVIDIA. So I was wondering, what you heard, saw, or how you feel about what that did. But you kind of answered that. You said, hey, with a little sell-off of or little people moving from the tech stocks to other areas, I know, and you just said it out loud, is you like that broader band.
Oh, yeah, that's a sign of a healthy market and a sign of a healthy economy.
Not stuck in one place.
Yeah. And add that to, I'll continue, they are now making a prediction that the holiday spending, the holiday sales, the retail sales and all that, for the holidays, they're expecting those sales to hit $1 trillion for the first time ever. Okay, so guess what? As I've said multiple times, the consumer needs to be in it to win it. If that's true, if we hit that mark, after all the things we've been through this year, and we've been through a few things this year, February to April were not a lot of fun.
Right.
And then we've got this whole shutdown thing that stirred the pot a little bit too. The consumer, which is 70% of gross domestic product, is still in there, and they're still spending. Now, whose money are they spending? That's the question.
Well, every time you bring that up,
yeah,
you point to it, the consumer spending and the strength of consumer spending. I always ask that question. But whose money are they spending?
Mm-hmm.
Are they spending and it's a debt dollar, or are they spending, what do we want to call disposable income? Mm-hmm. That's the danger zone. We have to purposely, or at least I think so, one of these episodes we have to purposely get into a very serious discussion about where debt fits into people's, personal investment planning and things like that to create, their own personal wealth.
Right.
Whatever that may be. So we should. So that's always going to be the question, though. You get into the, hey, the consumers are still spending. Well, okay, that's Chuck. Okay, but so I guess we'll see.
Well, I mean, just from a 10,000-foot view on that, and I'll leave it at that. Is debt rising is not necessarily a bad thing until we run into a bad economy. And when you hit a bad economy, that's where debt becomes a big problem.
I got you.
Okay, so that's the thing. So where we are, and we are most certainly we are done spending the $6 or $7 trillion that we got put into the market during COVID and all that. But so now that we've spent all that money and we've had that multiplying effect in the economy, the question is now are we starting to ramp up credit card debt and things like that, and second mortgages and things. So, and the answer to that is most certainly you're starting to see those numbers go up. When that becomes a problem is, again, when the economy becomes a problem. So.
Without a doubt.
There you go.
Without a doubt. Well, you touched on a couple things that, we talked offline ahead of time. So a quick recap. 42 days, Friday will be 45. We expect the government to, reopen and people to get back to work. let's just say by Monday.
Yeah.
Record high. I think this one slipped through. Were people listening? Did you hear that when Art just told us a few moments ago, Dow Jones hit a record high. So the highest close ever for the Dow Jones Industrials. Very interesting. Very interesting. Talked about what was the other? I got to look at my notes. There was something else.
Yeah. And again, you remember that
the holiday retail numbers are where they may go touched on the $1 trillion. So we've got just a couple of minutes, and I wanted to throw this in. You knew I had an interest in talking to you about this and seeing your thoughts. So you said holiday retail could hit $1 trillion, that $1 trillion figure.
Right.
Well, guess what? So can Elon Musk.
Oh, goodness.
So what are your thoughts on that? The package that Elon Musk has been potentially, we'll say offered, accepted, and there's a lot of things that go into whether or not he'll get a $1 trillion payout from his, chairman of the board.
It's funny because there's legal battles and all kinds of things going on because of he hit his numbers and they paid him $50 billion with a B, $50 billion for hitting his numbers. And now they've just gone through the process and the shareholders and everyone just approved $1 trillion with a T, $1 trillion package, which we just talked about the entire U.S. economy and all its consumers and everything doing $1 trillion during the holidays. And he just got approved for $1 trillion pay package. It's mind-blowing. If Elon Musk is looking for an investment advisor, I'm available. I'll take 1/100th of his assets, And it's silly numbers is really what it is. And it was funny. I was reading a story about it, and they wanted to make the point that his support, when it came down to the vote, the support for him to receive this $1 trillion pay package, and I don't know the specifics on it. I'm sure it's a very long-term thing, and there's a whole lot of numbers he's got to hit in order to get that pay package. Right. But they said that the support for the $1 trillion package was less than the support for the $50 billion package. And I had to chuckle. I'm like, yeah, no kidding, right? I mean, like that's $1 trillion that's not going to go into the workers' paychecks. That's $1 trillion that the shareholders aren't going to receive, right? Directly, anyway. I mean, as long as the stock keeps going up, they should be okay, happy. But you hear people out there complaining because some of these big executives are making tens of millions of dollars in their compensation. I don't even know what the multiplier is on that to get to $1 trillion, right? It's silly. It really, I guess, and you always talk about, who's going to be the first person to become a trillionaire, right? So you've got people with, I guess if he hits his numbers.
Well, that's the whole point right now. He is the first potential trillionaire.
Yeah.
I read, I should have printed something out so we could have really touched on it. Maybe we'll do it on the next episode just for some fun. But I read all the things that have to happen for him to get that payout. Yeah. And so it's like, well, yeah, it's difficult. Mm-hmm. Guess what though? That what I read, they said he has to do this, but here's where it's already at.
Yeah.
So everything is reachable. It's not like they put some things out there, and if he does it, like if Jamar Chase has 250 yards and receiving yards a game for 15 games in a row, and that's not going to happen.
Right.
That's a little bit out of reach.
Right.
Anyway,
yeah, definitely.
This is those qualifiers for him to get that $1 trillion payout. They're a challenge, but I was amazed when I went through the list of there are things that are already happening with his companies and business that he's headed there.
Yeah,
it's going to happen.
Let's give the man some credit. He works hard. Okay, first of all, he's a very intelligent individual.
Seems to be.
He's well read, and the interesting thing about him is he takes what he reads and implements it. Okay. Now it's also nice that he's also a 500 billionaire or whatever he is. So he has the money behind him to put things to the test, right? So that's fine. But you're talking about a man who, in order to hit his numbers that he's trying to hit, is sleeping on a cot on the manufacturing floor at night. He's not even going home or anything like that. And again, how you equate what the value of that is, that's a whole nother story. But they are throwing money at him. But I mean, he's not sitting around in his living room. He's working hard. So somewhere in the end there will be an analysis, and if Tesla and all these other companies do exceptionally well over the whatever number of years, then you say, was it worth it or wasn't worth it? Now, I would truly hope that, from a personal standpoint, I would hope that Elon Musk is a charitable individual, and I know he's definitely more charitable than some others, but that's a whole lot of money that could do a whole lot of good. So,
well, how do you bring this home to our listeners? And thank you to our listeners who have stayed with us, got all the way to this point. Yeah. Well, here's the deal. This is why you bring it home for Taking Stock. Chuck's opinion. Talking about Elon Musk and the $1 trillion, and talking about the incentives that it's an incentive. So he has to reach these things. He is confident in this economy. Yeah. Globally, not just here nationally, but he's confident in a global economy that he's going to achieve these things. And without a powerful, strong economy continuing to grow, he won't get there. So why do you and I at home, like you said, I don't even know what the multiplier is if you're starting at tens of millions of dollars. Why does this matter to us? Well, it's a sign, though. He is a brilliant man. He's accomplished tremendous things, and he believes in this global economy, this national economy. And I think that's a good sign for us, a positive note to close out episode number 62 of Taking Stock, Art.
I believe it is positive in several ways, but here's the one thing is we have just begun, in my opinion, we have just begun the process of, I'm not even sure what the term is, but I'm going to call it the artificial intelligence revolution. Okay? Our artificial intelligence is not going away. Okay, we have just begun to touch the very beginning of.
I wish you'd put that 2x4 away and quit hitting me over. Anyway, go ahead. How many jobs are going to be out there a few years from now that we haven't even comprehended right now? At least this old man hasn't comprehended, right? I mean, the jobs that our kids and their kids are going to have going down the road that just aren't even a thing right now. The things that we're going to be able to do from pick any kind of industry, look at healthcare. The things that we're going to be able to do from a healthcare standpoint because of artificial intelligence, things like that. So yeah, he's placing a bet, but he's confident about his bet because I'm sure he's going to be, him and a few other people, companies and things like that are going to be way, way on the cutting edge of all these things. They're going to be creating these things that are coming down the pike, right? So, again, $1 trillion, you just kind of sit there and shake your head and go, that's ridiculousness, right? I love it. Yeah, there it is.
But maybe not. It's yeah. So
if we can try, and it's not just Elon Musk. We happen to hit on that because that whole $1 trillion package. Right. But those people and their vision. If we can trust that vision and trust, that as we sit here, they're smarter than us. Mm-hmm. That guy walks in this room, he's immediately the smartest guy in the room. We have to trust that vision. Yeah. But it's exciting.
Yeah. Oh, it's very exciting. And then, I know we're out of time. We're close to being out of time. But just think about the regulation that maybe needs to occur with artificial intelligence. Okay, you're playing with something that, again, artificial intelligence is a tool, just like the pen or pencil. Okay, but you can do great things with it, and you can cause some damage with it. So you better make sure you know what you're doing, and make sure the damage doesn't outweigh the good, right? So, and I'll hop off my soapbox. How's that sound?
Great. Good spot to finish, because we have run ourselves right out of time.
All right.
For Taking Stock, episode number 61. Art, thank you. Thank you for your insights. Thank you for your presence here. Thank you for your presence in our community.
Well, thank you.
And when we get together again in 2 weeks, it'll just be a couple of days before Thanksgiving turkey.
Oh, amazing.
Holidays are fast approaching.
Yeah.
So.
Yeah, I always say, you have Halloween, Thanksgiving, Christmas, New Year's, boom, 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 and here we are. We're doing it again. So.
Well, and thank you to the listeners for joining us on this episode 61 of Taking Stock. And so until next time, again, thank you, Art Jarvis, for being with us, and listeners for listening along.
Thank you, Chuck. Appreciate you.
Thanks for joining us for this edition of Taking Stock with Art Jarvis. Join us again in 2 weeks for our next edition. Taking Stock with Art Jarvis is a presentation of Loveland Beacon in partnership with Jarvis Global Investments, LLC. Jarvis Global Investments, LLC is a registered investment advisory firm. The advisor is not attempting to furnish personalized investment advice or services during this production. Individuals should fully investigate the appropriateness of any investment before investing. Past performance is no guarantee of future results. Investments may lose value.